Okay, so there's this huge debate happening right now in Canada about fairness in our tax system. And while it can sound super complicated, it really all boils down to one simple question. A question that shapes how wealth is built and shared across the entire country. Let's get right into it and talk about capital gains.
And here's that question. Why do we tax some kinds of income less than other kinds? Now, this isn't just some technical, nerdy tax detail. It's a fundamental choice that really structures our economy. It creates this clear line in the sand between money you earn from your job and money you earn from your investments.
All right, take a look at this because it makes it super clear. Let's say you earn $100,000 at your job. The whole thing is taxable. Pretty straightforward, right? But, and this is a huge but, if you make that exact same $100,000 from selling an investment, only half of it is considered taxable, just $50,000. This one single rule creates a massive divide in how we treat money. And this is what creates what the source material calls a tale of two incomes. It's a system where the money from your labor, your hard work, is treated completely differently from the money earned from your capital. So what exactly is a capital gain? Well, it's pretty simple. It's the profit you make when you sell an asset for more than you bought it for. But the key piece of the puzzle here is this 50% capital gains deduction. It's a massive tax benefit that just slices the taxable part of that income in half right from the get-go. Now, a tax advantage this big creates a really powerful incentive for people at the top to get, well, let's just say creative. They find clever ways to make their regular salary look like it's a capital gain, turning it into what the source calls labor income in disguise. It's a whole strategy just to dramatically cut their tax bill. Okay, so let's dig into the data and see what's actually going on. Who is getting these gains, and who is really benefiting from this big tax break? The reality here might actually surprise you. For the vast, vast majority of Canadians, I'm talking over 80%, capital gains are just not a part of their financial picture. Over an entire decade, they didn't report a single taxable capital gain. Not one. So, if most people aren't getting these gains, who is? Well, the data shows they are incredibly concentrated at the very top. Just look at this. The top 1% of families get a staggering 57% of all taxable capital gains. Then you add in the next 9%, and you find out the top 10th of families rake in 82% of all the gains. That leaves the bottom 90% of all Canadian families sharing what's left over, just 18%. So, if this benefit is so heavily skewed toward the wealthiest Canadians, why does it even exist? There has to be a good reason, right? Well, let's break down the common justifications for keeping the system exactly the way it is. One of the most common arguments you'll hear is about inflation. The idea is that this lower tax rate is just a simple way to avoid taxing the part of a gain that's only there because of inflation over time, not because of a real increase in value. But see, that argument misses a huge piece of the puzzle that benefits investors. They can delay paying tax on their gains for years, or even decades, until they decide to sell. The financial value of being able to put off that tax bill is massive. In fact, it more than makes up for inflation. The source actually calculates that a 75% inclusion rate would be a much fairer offset. Okay, and here's the other big one you always hear. The fear that raising this tax would scare people away from investing, that they won't take the risks our economy needs to innovate and grow. But the source makes a really fascinating counterpoint here. What about the risks that workers take? When you invest years of your life training for a specific career, you're risking your human capital. What if your skills become obsolete, or your whole industry just disappears? There are no special tax breaks for that. Your income is fully taxed, period. It totally reframes the whole conversation about who's really taking risks in our economy. So after taking on those main arguments, the proposal on the table isn't some simple, across-the-board tax hike. No, it's a much more targeted and, frankly, much smarter solution. So here's how it would work. The idea is a two-tier system, and it's actually pretty simple. Step 1. For most people who have modest, maybe once-in-a-lifetime gains, absolutely nothing changes. Their gains below a certain limit would still be taxed at the current 50% rate. But step 2 is where the change kicks in. Only the very largest gains, the ones above that threshold, would face a higher tax rate, something like 75%. This targets the reform precisely at the very top, where those gains are most concentrated. So how does this targeted idea stack up against other solutions? Well, let's compare it to the government's recent reform of the Alternative Minimum Tax, or AMT. The AMT is basically this whole parallel tax system designed to make sure high-income earners can't use a ton of deductions to pay little or no tax. And when you put them side by side, the comparison is pretty stark. The two-tier proposal is simple. It works inside our existing tax system. The AMT, on the other hand, is a complex, separate system all on its own. The proposed reform could raise billions in new revenue, way more than the AMT. And when you look at fairness, it would apply to more high-income earners, whereas the AMT only ever targets a really small, specific group. This quote from the source material really just gets to the heart of the whole problem. The current 50% capital gains deduction serves as a gateway for endless tax-minimizing stratagems. In other words, this one rule doesn't just lower taxes, it actually encourages an entire industry of complex and costly tax avoidance schemes. All of this leaves us with a final and pretty provocative thought. Instead of building these complex, parallel tax systems, like the AMT, to try and catch a few people, is the most direct and effective path to a fairer, more efficient system just a targeted reform of the rules we already have? It's really the central question in this whole debate over how to build a better tax system for everyone.